presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man George in Newport Richey. George, what's going on, brother?
Hello, Tom. Good afternoon. How are you?
I'm doing great. Yourself?
Yeah, great. I've been following you for the last 2 years, listening to your show.
Well, thank you very much. I appreciate it, George.
All the hard work you've done for us over the years.
Well, I really appreciate you calling and saying hi.
My pleasure, Tom.
Okay.
I'll listen to your show.
Thank you, man. Have a great one, a safe one. Appreciate it, man.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 3 p.m. Eastern Time, and we got some market action. We're going to jump to crude in a moment. Now, you got the president signing executive orders in the Oval Office. Not sure what's going on or if that's related, but boy, you got some action in crude. This is 3 o'clock. I came on the air 7 minutes ago when crude was trading at 62.36, and yeah, we just hit 60.30, just like that, man. You talk about it. Whew. So we got some action in crude. Not sure what's hitting the tape just yet, if he's talking about anything, but they got executive orders in the Oval Office, and no matter what's going on, there is news out there. So we'll get to that, but yeah, we got crude. So much for that bid. Say goodbye to $60. Look at this, man. It's not stopping. We just hit a 59 handle, just like that, man. Crude trading now down $1 on the session, off 1.6% at $60. All right, we jump around to the S&Ps. We got some selling in this market, but whatever just came out at 3 o'clock. Crude's tanking, the market's accelerating higher, and we will get into it. But that is hitting it right now as we speak. And look at this. All right, man, can you imagine if we get the turnaround, a news-driven event? And yeah, when you get executive orders and decrees getting signed from the Oval Office, I mean, we're already almost 40 points off of the lows right now from we had. You get the S&Ps, and you're doing it with volume, man. Look at this. Okay, let's take a look at the volume right now. We got about 50 minutes left to go in trading. We take a look at the S&Ps. We hit an all-time high, 7,036 yesterday. Now, this is a daily. You're going to have some volume today, man. We get some action. Whatever just happened at 3 o'clock, we'll get into it, okay? But you're going to have quite an hour for the rest of the day. Crude just dropped $3. The markets are spiking, getting back some of the losses, and we've already done the most volume that we've done almost since the lows of December 18th. So we're going to have a big volume day. We'll see where that volume goes in the final hour trading. NASDAQ 100, you're off by 1.25%. Same thing. It's going to be a huge day of volume on the selling right now. We're doing 541,000 contracts. And yeah, we got a big hour coming up as the markets are oscillating. The Dow, we've been in this uptrend channel. You're backing off a bit. Same thing, though. It's going to be a big volume day across the board right now. You got the Dow down 108 points or 0.2%, 49,294. And you got the Russell right now up by 12. We jump over to yields. A little bit of higher price, lower yield. You got the 10-year right now as low as actually 4.14. So early in the session, we had 4.16. No, 4.14, the yield on the 10-year. Now, again, we're 2 weeks from the next Fed meeting. Market all but certain right now that they're going to stay where they are. The dollar, 99.10, negative 3 pennies right now in the session. And metals, yet again, the story of the day, gold. How about it, man? Up by $47. We're getting back the lows of the session. As again, getting back from those lows, you had a little bit of selling. We had some volume on the downside, and we get it all back. Gold up by 1%, right near all-time highs, and silver. Every minute I come to you, we're at all-time highs, folks. Silver's never traded as high as we're trading during this hour. In this day, the 3 o'clock hour, right now, to the tick almost. Silver, $93.40. Look at this run, man. Whew. Now, what's remarkable here is that you might do it this week with volume again. Okay, it's only Wednesday, folks. We've already done 500,000 contracts. You put this on a daily, yeah, it's another huge day, man. 200,000 contracts we're doing. 197,600. My goodness. Whew. All right, we check back to that crude market. We got some selling in crude. We had quite the acceleration to the upside yesterday, but boy, this would be quite a bar. You can engulf the whole thing. I had a great conversation with Teddy Kegstad interview this morning. That's up on the YouTube page if you want to check it out. TFNN, just search for it. Like and subscribe that page, folks. And yeah, you might, this is remarkable. Imagine, right? Remarkable strength yesterday, and whatever's going on right now, man. Crude ripping lower by about $2 since 3 o'clock, and all you got to do is get to basically, we're right there. You could engulf the whole bar yesterday. It's about 59.95 was the opening of that bar, and you might do it with volume too. Crude, 321,000 contracts right now. Whew. There you go. The Z-Man giving me the important information. Is that Trump calming down the rhetoric around Iran? You had to suspect that that was maybe the deal. And boy, from the headlines going on over there, I'm seeing headlines of 2,500 people dead, protests in the street, the threats of attacking. And one of the headlines out there is that President Trump's been told that the killings in Iran are stopping and there are no plans for the executions, and maybe there's no plan for strikes to go into there, etc. And yeah, that would be a reason why you could see a little bit of a de-escalation in the price of crude, just like that. The markets, however, markets barely higher. Look at this thing. Markets are higher by 8 points right now. So crude, a huge reactor, but that's not giving the markets the lift. It's giving it some volume, though, man. Look at this volume coming in. This is a 15-minute bar. 90,000 contracts. You're challenging the volatility we got this morning, but we got upward action. You got buying in this market right now with the S&Ps now negative by 49. How about the VIX? Look at this, too. I was going to say, how about as into quite the escalation from yesterday? We had a VIX at 1498. You push higher to 1810. But if tensions are easing in Iran, and boy, on the heels of Venezuela, and in terms of just how things are getting in the streets there, real potential for escalation. So that would be a good thing for everyone, including crude prices, man. Yeah, look at this. Woo-wee. There it is. Look at this, man. You're going to engulf the whole prior day's candle, and you might do it with volume. This is going to be a massive volume move. We just dropped $2.50 in the 14 minutes I've been on the air. Crude, $59.97 right now. Make it $60. You jump back to that dollar. 99.09. And we take a look at yields on that news. No real huge reaction. The 10-year at about 4.14%. You jump over the 2-year right now, basically flat, 104.09 right now. It's going to be an interesting 45 minutes. A little geopolitical volatility coming into things. And yeah, we'll see if this can give the S&Ps a bounce. But you talk about as muted as possible. That was a lot of volume to only bounce, 5, 10 points max, 7 points from where we were trading prior to that news, when crude is just ripping lower, man. There it is, 59.95. All right, folks, we're coming back. We'll talk some equities. We're going to take a look at some of the banks. Bank of America, Citi, JP Morgan as well. Be right back.
Researching trading techniques on how to begin your trading journey. You've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Kegstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Kegstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. So it would be good if tensions eased in Iran because, man, I was checking out the front page of the Journal earlier, okay? And I'm sure you've been seeing some of the headlines if you're watching this program. But you got evacuations from Qatar Air Base. You have Iran signaling that they plan for swift trials and executions. All right, you see those two headlines alone, and, man, you talk about the ability for things to escalate. So potentially things calming down, Trump maybe easing some of that tension, and you got crude. That's your 4 hour. You put things back on a daily, and as I mentioned, you're looking at engulfing the entire prior bar. Be about $59.95 where that candle opened yesterday. 375,000 contracts. We're at 327 right now. All right, we jump to the banks. So today it was Bank of America. You come up with the numbers, the conference call, you trade lower, off about 4% right now. JP Morgan, quite a slide yesterday, off about 0.8% right now. Goldman Sachs off 0.5% on some of that news. Morgan Stanley, you open lower as well, off 1.25% right now. And so you go to the 10% plan, and yeah, there's people trying to fill that void. Now, it's going to be interesting to see where the details go in this, because if you could offer 10% for a credit card, people would be doing it right now and making money on it. If there was an opening in the market for margins and profitability, people swoop in and they take that profitability and margins. It's not even close to 10% right now. Nonetheless, Built, 3 new credit cards. I mean, if you're in this business, you better be trying to capitalize on something going on right now. Okay, the bummer is that this seems like quite a setup. You're putting people into credit cards that are capped at 10% for a year, and then what happens? Does it go back? I don't know. But all it is capped for a year. The new cards include the Obsidian and Palladium cards with annual fees and the no annual fee Built Blue card. And yeah, this firm is known for rewards for mortgage and rent payments, will maintain those rates for 1 year, and they will only apply to new purchases. Now, many lenders get introductory rates, but you better know that they're coming higher. Built's variable annual percentage rate will jump as high as 34.74% after 1 year. And some of those come with fees. Now, a lot of credit cards come with fees right now. One of them's coming with a $495 fee. You better get some rewards for that. They have 1 million card holders. And here's what's remarkable, okay, is that they're definitely assessing the ability to hit people with higher interest rates going forward. Because you might be able to make money somewhere in between that range of 10 and 20%. But when you're at 10%, there are many better ways that you can lend money in a collateralized way, even in some fashion, versus credit card debt. It's just uncollateralized debt to people who are in need of it, and most of the time, an unideal credit situation, right? As in, if you're going out there and you're a built customer and you're on this hook of 34.74%, you don't have many options usually. Versus, I mean, you're talking about mortgages right now at 6.25%, and meanwhile, you're going to only be able to pay 10% for a credit card payment. You know, these banks are in the business of lending on collateralized investment properties. I mean, imagine if you got like an investment property, okay, they'll give you an 80% loan where it's collateralized to that, but you're going to pay 9% as an investor, depending on your credit. You're probably paying 10%, depending on your credit and some of the areas of real estate. And that's for a real estate loan that you're putting up a mortgage behind. You're that close to 10%. Just remember that when you say, well, we can do credit cards at 10%. If they could do it so easily, why are investment property loans pushing 8%? Okay, I mean, a mortgage rate's 6.25% right now. So if you have an investment property out there, you're going to be paying 7.25%, 8%, 8.5%, 9%, depending on your credit, even higher in some instances. So 10% for a credit card, we'll see where they go. And yeah, the next headline, the banks. Now, JP Morgan, man, okay, they got some credit card debt. They talk about it in this one. We talked about it yesterday. You talk about the amount of numbers. Yeah, you better believe it. There it is. Non-interest expenses, $105 billion. And in terms of the credit cards they have, they had it in the JP Morgan number. But yeah, it's an all-out assault on them, and they're going to bring it, man, because they have no other choice but to bring it. But yeah, these are the headlines that were out today. This is 1:21 this afternoon. And, you know, tough to trust the Iran regime acting with any type of reasonable nature, but we'll see what happens. Nonetheless, tensions easing, though, and then you got the evacuations in the Qatar airbase as things escalate over there as well. Hey, the market's reacted, man. Market's never wrong. Whatever just got said, it's get taken seriously, period. All right, let's take a look at the heat map, see what we got going on. And yeah, some of the hottest equities out there dragging down everything, man. Look at this. It was all the memory stocks, okay? Broadcom down 4.5%. Micron off 2.25% right now. Not Intel, though, man. Intel's running for $50. Qualcomm, AMAT, CLAC. NVIDIA, 2.25% right now. Microsoft off 2.6%. Oracle off 5%. Let's check out the streamers. Oracle makes me think of Paramount. Paramount 12.09 right now. Netflix, they just keep up and look at this thing, man. They just keep saying, we'll spend more money. We'll spend more money. No problem. We'll spend more money. And the big winner is Warner Brothers. Quite an acceleration. You're sitting right near that bid price. And Netflix, as the rumor is, they're going to up their bid, make it cash, man. And they have to make it cash because their shares are worth so much less than what they were originally worth. Right? And this is why people love trading their shares. You trade your shares for it. Okay? This is like Coeur d'Alene. Okay, check this one out. Coeur d'Alene's buying New Gold, okay, for like $7 billion. New Gold says proxy advisors recommend voting favor of CDE, okay? But what happened was it was a cash and stock deal, and it happened somewhere around October 20th, all right? This escalation was when Coeur d'Alene announced they were buying New Gold for like $7 billion. Okay, let's see where New Gold's trading. And what was wild is that New Gold actually traded lower on the news that they had agreed to a buyout. Why? Because they had agreed to take shares from Coeur d'Alene that by the time Coeur d'Alene investors figured out that they were paying $7 billion for New Gold, those shares tanked, therefore actually pushing down the value of new gold. Now this equity looks strong. Okay, it does. You look at the weekly, man, you're coming back up to the highs. You get some nice volume on January 5th, and the only reason you're not at those highs is because they scooped up new gold. And realistically, they scooped up new gold back here. It was a great time to be scooping up assets in the metals market, man. So CDE, Coeur d'Alene is going to make that happen. And yeah, all of these about that. I think it was. Under the agreement, they're going to receive about half a share of Coeur d'Alene. There it is. They're going to receive half a share of Coeur d'Alene. So imagine they make that deal, right? And Coeur d'Alene uses their shares when you're at 23, and they say, we'll give you our shares. And then by the time New Gold gets it done, the shares are at 15, but they're back there. Stay tuned, folks. We're coming back with some of these equities.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got metals higher. You get the XAU right now up another $2.76. That's your weekly. You take a look at the daily, though. Yeah, and quite the pop. We had gold lower and gold pushing yet again to those highs. You jump back to gold, 46.41, up by $42. We hit another all-time high today. And silver not stopping, man. Right up there. 93.17 on silver, and you're doing it with volume, folks. You are doing it with volume on silver. Pretty remarkable. We jump back to crude. So, yeah, $60 right now for crude. And, yes, there is the headline. So, Trump says Iran protester killings have stopped after his threat. We'll see if that actually plays out and if that's the reality. Because I agree with some of the conversation in the YouTube Tigers Den, saying maybe it's a little bit of a hook and bait, right? You never really know, as would be the case with any type of an expected strike. But, nonetheless, that's what he says. And so markets react, and that crude market reacts as well. You have the 25% tariffs hanging out there with Iran. That could cause some complications with some of our other partners, China especially. But watch that crude market, because they're reacting and they're taking that seriously right now. Is crude about to engulf everything we had happening yesterday on a daily basis, and you're probably going to do it with volume. We're at 335,000 contracts now. You got to get 375 was the number yesterday. Check in on those banks. Take a look at the XLF, up and down another 0.2% right now. Let's check out NVIDIA, the big dogs. We got a little negative action. NVIDIA off 1.8% right now. Nothing too crazy on volume, though. You know, we get this selling back here in November. You get some buying on options expiration December 19th. Excuse me, folks. But yeah, no real pronounced selling. That's your daily. You go to a weekly. You know, on a weekly basis, you do got some selling out here right where we are. November 17th, you're right in the middle of this bar, and that's when you had a lot of selling on their last earnings. Remember, they crushed it on earnings, and the market just punished them. You go back to the daily, and there was your volatility. You crushed it, you open higher, you rip lower, and that's right where we are right now. Whew, you trade below there, better watch out. Critical area where you found a bid. Microsoft, yeah, look at this. Okay. The biggest leaders on the way up, man. Not what you want to see in this market. Showing a little bit of weakness today. Microsoft off 2.5% right now. Not Google, though, man. You can't hold Google down. Check this out. It's just not stopping. Now, you're not going to have the volume today. Look what you did. Last couple days, you do 24 million. We've done 10 today. But, hey, they're not selling it. Google actually in the green right now. Now, another one I've been looking at is Fiserv, right? This thing got clobbered. You had the CEO jumping out to join the Trump administration, cashing in his options, and then you find out that the books aren't actually what they thought they were when he cashed them out. So there's a lot going on with this equity. But longer term, you know, you put a stop somewhere in here tight, man, because you never know on something like this how things could just keep unraveling, okay? You just ripped from $240 down to $66. You're back to where we were in 2017, giving up almost 9 years of gains. But the other side of that is, I was looking at this. Look where you're back to. Some real nice acceleration in the beginning of 2019. That's a low of 68.45. You're just below that level right now. Don't give this a lot if you're getting in, folks. Okay? But December, maybe that's the end of the pain, right? You finally had some action. You had some buying. You had a positive month. You go on the weekly. Not as encouraging on a weekly, but on a monthly basis, it had me start looking at it. And then when I went back longer term, and I said, you know what? We're kind of right back into this area of strength. We're right here. All right? You had some nice strength and volume from the February of 2018 when you traded from 62 up to 73. You had some volume in the beginning of 2019 when you were as low as $68. We're at $67 right now. But look at how you had all this volume in here, and then look at the volume was light from June of 23 up to literally, and look how you always get one little head fake, right? You get the acceleration to November of 24, You get a pullback, and then you get one more run before they pull the plug. But that one's on my radar right now. Don't give it a lot. Okay? This is as close to catching a fallen knife as you want to go. And when you're doing that, do not give it a lot. And understand, when you're in an equity like this, okay, it's super high risk. Nothing saying that you can't just wake up one morning like you did in October, and this thing's at half the price that it was right now if you're entering this equity. So don't get a big position. But at some point, I imagine this thing's going to turn around. Okay, you're still talking about a $36 billion financial company. Financial payments, right? Financial services. And yeah. Take a look at the volume in the markets. All right, S&P's 1.4. Yeah, you're going to have the biggest day since December 18th. So you get that buying December 18th, that starts to run higher, and today's going to be the biggest volume day since then probably. We're coming in. You get this bar out there from January 2nd. NASDAQ. This market's clawing back these losses right now, though. It could have been worse. NASDAQ's off 1.1%. Look at this run. We're 200 points off the lows. You're off 1.1% right now. I imagine the VIX is dropping as well, 1654. All right, market was a little worried about Iran, more so than you may have imagined, because we are getting a reprieve right now. Crude's down $3 from where we were. So much for rushing out to fill up the gas tanks. Now you want to wait a day or two. Look at this. You're going to take it out. Man. We'll see what crude can do in this final few minutes here. Crude's off 2.7% right now at 59.50. Look at the Russell. Look at the Russell. A lot of green in the Russell, man. We got a little rotation going on. Man, you look at a heat map of this Russell. You got green all over the place. Now, you got a lot of miners in here. Okay, what do we got? We got real estate in here as well. Consumer staples. Okay, we'll jump to some of those when we get back. Because, yeah, Walmart. A day of safety on a day like today. Walmart flat at 120.39 right now. Not Lennar. We've had quite a run recently, but you're negative by 1.6% right now. DR Horton off 1.1%. We'll take a look at the home builders when we get back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. We got the S&Ps negative by 38. We take a look at some of the home builders. Nice sign of strength on January 9th. And from there, we're drifting a little bit higher on lighter volume. But on a day like today, we got volume everywhere in this market and negative action, but not quite on these. We get a little bit of a pullback actually on lighter volume. So that's what you want to see, right? If we get a pullback, you're looking for it a little bit lighter. DR Horton off 1.2 right now. We jump to Lennar. In Lennar, I keep going back to this acceleration in November. Real ramp up on extended volume on a daily. You take a look at the weekly, all right? Huge buy-in November 17th, and that was Thanksgiving week, the week after. So we don't have anything in terms of that type of volume just yet, but home builders a little bit lower today with the market. NASDAQ 100 off by 1.1. We keep our eye on crude, 59.50. All right, we take a look at rates. So we got a Fed meeting 2 weeks from today. 95% chance that they are right where they are today, which is 3.5 to 3.75% for their range. You go out to March, 73% chance there's no movement. You go out to the Powell's final meeting, April 29th, about a 60-40 chance as to whether they stay where they are now or we get any cuts. You go to June, new Fed chair, that's when the market expects a cut. You go out to December right now, and the market has 2 cuts priced in. Now, I keep saying, my base case is 3, man, okay? And right now, 3 or more is only priced in with about less than a 40% chance you get 3 or more cuts. I'd be very surprised if we get no cuts from Powell. We then only get 2 over the final 5 meetings of the year. Now, doesn't mean that won't be the case. We'll see where the data leads us. Inflation, what's going to happen there? But it's not there right now. We just got a CPI print that was light. Okay? And so base case, the next Fed chair cuts on their first meeting after Powell has no cuts. You get a skip of the July 29th. You get a cut, you get a skip, you get a cut. They go 1, take a break, 1, take a break, 1. So if that's the case, there's movement that's possible to the downside for yields. And you're seeing it play out a little bit today with higher price, lower yield. The 10-year at 4.14 right now. But we'll see what happens because the Fed controls the 2-year, not the 10-year especially. I find myself wondering and thinking that it's highly likely that the president, since he's aware that Fannie and Freddie buying $200 billion of mortgage-backed securities, and I bet that he's aware that the Fed has bought mortgage-backed securities in years past, like the mortgage crisis, that could be on the table for mortgage rates. And so if the Fed is cutting and the 10-year is not coming down, there's other ways for them to get in there with QE, quantitative easing. They buy mortgage-backed securities, and that's going to be one of the biggest shifts that may take place when I see a new Fed chair. That's not happening with Powell. He's not buying mortgage-backed securities. The next Fed chair, if the 10-year is not reacting with the 2-year, it's totally in play. So housing, I think we got a good 6 months coming up on housing right now. You saw the first reaction on mortgage rates when the $200 billion from Fannie and Freddie got talked about. We got a mortgage handle that dropped down 22 basis points, not the handle. Mortgage rates dropped almost 0.25% on that news alone. All right, we jumped to some of the banks with their numbers. Citi off by 3.7. Today, Bank of America off by 3.9. Not a good start to the season, and Bank of America was just trading at 325 on the open yesterday. You're at 308 right now. Goldman lower by 0.7. Morgan Stanley off 1.5. We got bad ticks all over the place in these banks, which causes those charts to look a little weird. Jump over to Amazon. Quite a recent run higher, but you're giving back some of it. Amazon last week trades from 227 to 247, and just like that, you give back half the move. $20 up, $10 down. This market's a little uncertain where we should rest right now. Growth stocks under pressure. Nvidia off by 1.9. You look at Google, the leader right now. My goodness. Whew. Yeah. We're drifting a little bit higher on lighter volume here. Google had some nice volume November 17th. You make it up to that nice round number 300. But then what have we done? You come back with some selling. Volume picks up on the selling. And since then, we're trading higher on lighter volume. And pretty remarkable. We have basically no pullback whatsoever. You look at an equity like Google, and any pullback's going to seem substantial when you run from 140 to 340 in a straight line move. That's a straight line move. You got 3 weeks down at one point, but really, what'd you give back? 15, $20? This ran $200 higher from 140 to 340, and it looks like your deepest pullback was $30. So make sure you're prepared for those pullbacks. If you're not prepared for them, then I encourage you to get a stop in there. It's been a heck of a run. You're holding these companies in the long run. God bless, okay? We're in exceptional times, and we might be dramatically higher in 5 years from now, right? But if you're unwilling to hold through a pullback to 250 on Google, which is an $86 pullback, well, that's possible, folks. That's just a 50% retracement of the run we've done in the last 10 months. Okay, and just volatility-wise, if you get this type of volatility to the upside, if market sentiment turns, at some point, we're going to experience some short-term volatility, even in a market that's relentlessly strong right now. Even on a day like today, the VIX, still basically the historical average of about 16 and change. Okay, things dropped out of bed during the holidays. VIX right now up 5.6%, but not the 10% that Steve Rhodes talks about sometimes. Let's check out copper. Copper's been on quite a run. Hit new highs again today. Copper's had some nice volume, man. Check out this weekly on copper. Look at that extension last week on copper. Copper had more volume last week than you did. Nope, just missed it. Okay. 324,000 contracts when it dropped out of bed for tariffs in July. You did 312,000 contracts. It was a huge extension last week. You closed it out at 589. Just below the highs of July 21st, the week of. You're trading higher again. Check out these copper stocks. Now, FCX had a problem with their Grasberg mine. Okay, that happened in September. You talk about getting it all back and then some, man. My goodness. This metal run. Jump over Southern Copper. They had no problem with their mine, so it's been a one-way trip from $75 up to $180. Again, huge volume last week. These copper stocks had a nice acceleration, man. Look at the volume in Southern Copper. Whew. You've been dropping down. Boom. Nice sign of strength as you break away. FCX, huge volume in there last week as well. So there's some strength in copper right now. And then you look at the copper contract itself. You break above highs and you do it with tremendous volume. All right, we got 10 minutes left to go until the closing bell. We got the S&Ps negative by 0.7%. Seems like it's been a more volatile day. Only down by 0.7 in the S&Ps. NASDAQ down 1.2. We were as low as 25,420. You get the Russell leading the way up by 13 points. One more segment, folks. We're coming right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Markets in the red. We got about 5 minutes to go until the closing bell. And yeah, we got some volume, man. NASDAQ 100, you're going to have the most volume since we had that acceleration in middle of December. So almost in a month, we're back from the holidays. We got 323 points in the red, 1.2%. Yeah, you're at about 600,000 contracts in the NASDAQ. S&Ps, same deal. You're at 1.5 million contracts right now, and you're coming into basically any type of volume we had in the middle of December, and you also had that type of volume on that November pullback as well. We jump over the VIX, 1674. Trump calming some of the fears with the escalation in Iran, and you have crude reacting as we drop from 62.36 right to $60 on the dot. That's where we are right now. You were as low as almost 59. You made it to 59.19. You talk about some volatility in crude. And gold and silver stealing the show, stealing the spotlight yet again today. Gold up by $39. Take a look at the volume. It's a big volume day for metals yet again, man. On a daily basis, you're going to do almost 300,000 contracts. You're breaking above it, and you're doing it with volume. Now, you're not quite above where we were December 29th. That's 307,000, but you're going to be pretty close. It's a big day. There's a lot of strength in the volume. The thing that I always keep coming back to, though, in the intermediate term, volume don't lie, folks. Okay, this is not the run-up in gold that we had in October. It's not even close. Look at the volume. Not even close to what was happening in October. So be careful out there. Silver, it's more pronounced, man. Gold, it's very clear that this acceleration does not have the volume. All those gold bulls are playing with silver. And look at the weekly volume, man. It's only Wednesday on silver. 510,000 contracts right now. We got a lot of volume in this run from about 50, 60 bucks in silver as well. Silver up by 8.1%, 93 bucks an ounce. If you got any of those Great Panther silver ounces out there, hang on to it, folks. I still got mine somewhere around here. I do. Great Panther silver. Got to hit them up. We'll bring them on for an interview as well. Folks, thanks so much for tuning in. Have a great night. Have a safe night. Enjoy it with your friends and family. Appreciate you being here at TFNN. I'll see you tomorrow morning, 9 o'clock with the Morning Market Kickoff. Have a great one, folks. Thanks so much.